Hello everyone, there's going to be a few I told you so's in today's video. We're going to go over the entire market. We're going to talk about why I thought the market was hanging by a thread, why the market should have continued falling, and why it did. So in today's video, we're going to talk about the SPY, the IWM, the NASDAQ. We're going to take a look at how the banking sector took the biggest hit and what the next steps are for the overall market. All right, so without further ado, let's get started with the video. All right, I'm going to try to make this video nice and quick and short. All right. Number one, yesterday we saw one little reversal candle on the SPY, right? I was showing how this is still a very, very bearish setup. And unless we got a close above 402 or 403, I said in yesterday's video, then that would be a better opportunity to go long. But until then, if we didn't get a close above that level, 401, I said 401 to 402 would be a good opportunity to reload into shorts for a continued move down. And we ended up going to a high of 401.48. So pretty perfectly, we came back, gave bears another opportunity to short, and it continued falling lower. And it worked out really perfectly. So now, what are the next steps that are going to end up happening? Number one, we see that the MACD indicator is looking like it's about to cross down lower. We can see that the lower level of the Bollinger Band is also pointed lower, which is not the best sign for bulls, because it means that there's more room to fall. So essentially, just taking a look at everything here, one of the main things is looking at the IWM. So how much more room does the IWM have? We're going to also take a look at Tesla. So what we're looking at and what we want to take a look at is basically how much more room does everything have to fall. So we saw that the SPY has more room to fall to the downside. Can the IWM get another move downwards? And currently you can see that it closed outside of the lower level of the Bollinger Band. It can very easily gap down just a little bit more as well. And that would essentially obviously cause the overall market to also fall. And now how we open is also largely going to be predicated on the news that's going to come out at 8:30 a.m. So we have lots of news coming out tomorrow morning. So we have to see how that's going to affect the overall market as well. We could also clearly see that the XLF, which is the banking sector, is getting absolutely just decimated here as well. And very similar to the IWM. We can see that it came and stopped at the 618% fib at 181.39 almost perfectly. So essentially, we basically just have to see how 8:30 a.m.'s news is going to play out. I doubt it's going to cause like a huge gap up, but if it does, that's fine. But ideally now, what we want to see is the easiest trade, in my opinion, would be if we get a large gap down. If we get a large gap down tomorrow, it would be a very good opportunity to play the bounce. If we open flat, then we have to lean bearish. So if we open flat, for example, we closed at 181.41, right? If we open around this area, then we have to assume that there's going to be a small bounce, but then it can easily continue to fall lower, right? But if we get a large gap down, then there isn't going to be that much more room to go to the downside. It would make more sense for bears to cover. And once they cover, they bring the price back up for another retest. So that's why the easiest trade would be if we just gap down. So taking a look at the NASDAQ. No, sorry. So before we continue to the NASDAQ, I want to take a look at the MACD on the IWM. You can see that it's oversold, right? So the IWM's MACD is much lower than the SPY and the NASDAQ. You can see that it's oversold here. And basically, it doesn't look as terrible for bulls, because when the MACD is oversold like this, it means that there's room for it to cross above. And if it crosses above, then that momentum of the MACD can translate into the price of the IWM. But when taking a look at the SPY and the NASDAQ, the MACD indicator is still, it looks like it's about to cross down below. And once again, once you do get a cross down below, you generally have a continuation in that direction. So either you're neutral or you are bearish for at least 2 days after you get that cross down below. So that's what we're going to be taking a look at on the NASDAQ. And to top it off, take a look at Tesla. Tesla is completely showing a lot of weakness. So once again, it would be a really, really easy, nice little trade if Tesla, the IWM, if the overall market gets a nice gap down. If it gets a nice gap down, then that's it. It'd be a perfect little opportunity to play a bounce in the morning. And we could quickly go ahead and just take a fib level from here. And this is almost perfectly at the 38.2% fib for Tesla. Basically at 173.40, you can see that it's basically holding, or it's at that level now. So yeah, the easiest trade, once again, would be if we get a big gap down. Then we could lean long. Other than that, the momentum is still clearly bullish. Or sorry, the momentum is still clearly bearish. So yeah, it should be a pretty fun Friday. But yeah, you know, aside from that, there's not really much else to look at. The bonds, you know, we should take a look at the bonds. The bonds are obviously, they're not as correlated to the overall market right now. Probably primarily due to the fact that the banks took a huge hit. But we can see that the bonds are starting to show some strength. And it looks like if we can close like this, then it looks like we're about to close above these major resistance levels. But we're not yet closed at the moment. So we need to see how the bonds close. And of course, we know that the bonds have correlated relationships to the market. If the bonds are doing well, then that means that the stock market should also be doing well. But clearly, this strength in the bonds is not translating into the overall market. We can take a look at the dollar. The dollar, I was showing how based off of the dollar's strong move like this, the overall market should be neutral or bearish, and we ended up being very, very bearish. So once again, the dollar is still holding these, because after a big move on the dollar, it makes sense that we're going to have some sort of a pullback, giving an opportunity for dollar bulls to go long again and then continue. So yeah, we know that the dollar has an inverted relationship to the market. If the dollar is going up, then that's generally not a good sign for the market. And this big green candle and a bit of a pullback obviously is not bullish for the market. And then just for fun, we could take a look at the VIX. The VIX had a huge move upwards, and that's fun. We basically have a cross above on the MACD. And generally when we get a cross above, once again, it should continue for at least 1 to 2 days afterward. So on the VIX, it should be neutral or bullish. And we know that the VIX has a inverted relationship to the market. So if the VIX is doing well, that means that the stock market is not doing well. Clearly, we saw that today. So yeah, I mean, I hope you guys enjoyed today's video. We have been having an amazing few days in terms of trading. So I hope you guys enjoy. Make sure to like, comment, subscribe, do all that good stuff. Hope you guys have an amazing Thursday night. Thank you so much.